Why is everybody talking about the Bitcoin ETF? That's what we're going to be talking about today. Hit that like and subscribe button if you like crypto content. It's difficult to believe that in 2024, there are people who have never heard of Bitcoin. The digital currency has evolved from just a fringe imitation of money to a mainstream financial asset that's captured the attention of investors, institutions, and the general public alike. However, Bitcoin and cryptocurrency in general has still not been completely embraced by the general public. There are still a lot of people that are skeptical about the currency, whether because they see it as another pyramid scheme or because they can only think of it as a currency for criminals. As a result, many Bitcoin enthusiasts agree that if Bitcoin will grow past the point where it is now, there is a need for authentication and even redemption. The price of Bitcoin fell sharply in 2022 and wasn't able to recover properly in 2023, thanks to the collapse of FTX, controversies surrounding other crypto exchanges, and the crisis in the US banking system. So, the Bitcoin market is definitely in need of some authentication and redemption, which is where Bitcoin exchange traded funds, or Bitcoin ETFs, come into play. For those who don't know, ETFs are investment funds that are traded on stock exchanges. Much like individual stocks, they allow investors to access a diversified portfolio of assets, such as stocks, bonds, or commodities, without having to directly own the underlying assets. Bitcoin ETFs offer investors a similar opportunity in that they allow people to basically invest in Bitcoin without particularly owning Bitcoin. However, there is a slight difference in that Bitcoin ETFs are very specific and only offer investors access to Bitcoin, no other assets, not even other cryptocurrencies. Now, Bitcoin ETFs must be differentiated from Bitcoin futures. With Bitcoin futures, the ETF provider does not hold physical Bitcoins, but tracks the price of Bitcoin futures contracts. And futures contracts are agreements to buy or sell Bitcoin at a predetermined price on a future date. On the other hand, with Bitcoin ETFs or Bitcoin spot ETFs, the ETF provider may choose to hold physical Bitcoins in custody. This means that the ETF provider buys and holds the physical Bitcoins that correspond to the value of the ETF shares it offers, allowing people to invest in the digital currency without having to buy Bitcoins themselves. And immediately, you can understand one of the reasons why people have been craving a Bitcoin ETF. Those who are currently in the Bitcoin market know that Bitcoin ETFs would throw the doors open for even more people to get into the market. There are some regular investors that have been wary of getting into Bitcoin up to this point for a variety of reasons, including the volatility of Bitcoin and the complexity of storing cryptocurrencies. But by buying a Bitcoin ETF, they're able to bypass those issues and just get straight to investing into the benefits of investing in Bitcoin. Bitcoin ETFs, by design, delegate the responsibility, the security of assets to reputable custodians employed by the ETF provider. This not only mitigates the risk of theft or loss, but also provides investors with the assurance that their investment is held in a secure and regulated environment. With someone else bearing the risks, investors are left with the profits, basically. So you can understand why the existence of Bitcoin ETFs will make more people willing to invest in Bitcoin. And with more people entering into the market, the value of the currency is sure to go up, seeing as how the value of Bitcoin is heavily dependent on market demand. Another reason why some people are really excited about the prospect of a Bitcoin ETF is because of the possibility of a regulatory oversight. One of the complaints that people outside of Bitcoin circles have about Bitcoin is that because it is unregulated, there's no guarantee or security for their holdings. However, Bitcoin ETFs operate within the regulatory framework of traditional markets, which are subject to oversight from regulatory bodies. So investors who are used to traditional investments would find Bitcoin ETFs a much safer way to get into the Bitcoin market. Bitcoin ETFs also benefit from the inherent liquidity in established stock exchanges, and by liquidity we refer to the ease with which an asset can be bought or sold without significantly impacting its price. As we mentioned earlier, Bitcoin is highly responsive to the market demand, such as that if there is a significant sell-off of Bitcoins, that could seriously tank the value of the cryptocurrency. However, Bitcoin ETFs are supposed to help take care of that problem. Apparently, the large price swings that make Bitcoin not liquid are due to the limited market participation. But with Bitcoin ETFs, there would be a diverse and active pool of stock exchanges facilitating smoother and more efficient trading of the shares. This should then reduce the likelihood of larger price swings, regardless of the size of transactions that are taking place. Not everyone is excited about this particular prospect, and that's because many have benefited from the volatility of Bitcoin. Just in the same way that Bitcoin's price can take a sudden and drastic dip, it can also experience a sudden and sharp rise. As a result, many have woken up one day and found out that they were millionaires, thanks to their Bitcoin holdings. And these people know that possibility of this happening with a stable Bitcoin market is almost non-existent. However, the majority of voices agree that a Bitcoin ETF is a good idea, and the rise and fall of Bitcoin's price in recent times has been dependent on this prospect. Some very big names within the financial space have actually applied to the SEC to get a Bitcoin spot ETF. We're talking about companies like ARK Investments, Invesco, and the almighty BlackRock. When it came out that BlackRock had applied for a Bitcoin ETF, the price of Bitcoin rose considerably. And the simple reason for this is legitimacy. BlackRock is the biggest financial player in the world, backing many of the biggest brands in the world right now. So if they are excited about Bitcoin ETFs enough to apply to the SEC for one, it has to mean that Bitcoin is something legitimate. At least it looks like that's how people see it if the sudden influx of investors into the market is anything to go by. Unfortunately, the SEC hasn't exactly been keen on approving Bitcoin ETFs. In fact, it has rejected quite a number of them over the years, and there are many applications that have still not received a response. Many people thought that if any company would get that approval, it would be BlackRock because of their track record of ETF approvals and just the general influence that the company has. Seriously, you should do your research on BlackRock. It's wild. In fact, some other companies decided to refile their previously denied applications because BlackRock had filed theirs. However, it's been months since they applied and still nothing. And the longer we've gone without that approval, the worse it has been for the price of Bitcoin. Nonetheless, there have been brief glimmers of hope in the otherwise dreary landscape of the possibility of a Bitcoin ETF application approval. For instance, in late 2023, Grayscale Investments got a ruling by the U.S. District of Columbia Court of Appeals that made a lot of Bitcoin enthusiasts very happy. They had initially gotten their application to convert their Grayscale Bitcoin Trust into an ETF listed on the New York Stock Exchange's ARCA market, denied on the basis of the application inadequate for spot Bitcoin ETFs. But instead of taking their denial lying down, they decided to sue the SEC, and they won. Grayscale's victory did not automatically mean that the SEC had to accept their application, though. It did mean that the SEC could not reject it based on the reasons they were initially given. So at the very least, Grayscale was given the opportunity to have their application revisited. Still, the fact that Grayscale got the victory sent waves of hope through the Bitcoin market, even promoting new spot Bitcoin ETF applications. These financial institutions are well aware that the court is not saying that the SEC must approve their applications. However, considering that they just lost a court case, there's a significant possibility that the SEC would be more lenient in their evaluations of proposals, increasing the likelihood of approvals. This same hope was expressed among Bitcoin investors in the form of a spike in the price of Bitcoin. There was an influx of Bitcoin purchases following the victory, which resulted in an increase in the price of the coin. It should be mentioned, though, that it has been a few months since the ruling, and there has still not been any Bitcoin ETF approval. At least, that's what we thought, until tweets were posted by the SEC on Tuesday. The first tweet read, "The SEC grants approval for Bitcoin ETFs for listing on all registered national security exchanges." While the second simply read, "BTC, and yes." This tweet came from the official SEC X account. From all that has been said so far, it should come as no surprise to you that the price of Bitcoin quickly spiked following that. The price of Bitcoin rose by $1,000 in just a couple minutes. What's more, just within 10 minutes of the tweets being posted, more than 500 million in futures positions were opened. Unfortunately, it turned out that the tweets were fake, and immediately this became clear. The Bitcoin market fell again, losing more than 1,000 that it just gained. Apparently, the SEC's account had been compromised, and so none of the tweets about Bitcoin ETF approval was authorized. The X team also corroborated this by mentioning that the SEC account did not have two-factor authentication, hence the hack. Gary Gensler, the SEC chair, even had to post on his personal X account that the SEC had not approved the listing and trading of spot Bitcoin exchange-traded products. Some people would like to think, though, that those tweets are more leaks than fake. That is, that the SEC is actually in the process of approving spot Bitcoin ETFs, and that the announcement just came a little too early. However, from what we can see, the bottom line is that we still don't have an SEC-approved spot Bitcoin ETF application. And while there have been glimpses of hope there here and there, there's no concrete proof that the SEC will approve any of these applications. This has not and probably will not stop Bitcoin enthusiasts from looking forward to the day that when the SEC would approve a spot Bitcoin ETF. But until then, we'll all just keep talking about it. Thanks for tuning in to the Future Money Guys this week. And don't forget to hit that like and subscribe if you haven't already. Till next time, be positive and be profitable.